Good afternoon, everyone. It's Brian Caprice from Keep Trading Simple, and welcome to this week's Nadex weekly charts and analysis. Todd and I are on the ball today. I know we're we're already forgetting to share screens, and God knows whose fault that is. But yeah, it's like two high school kids just chatting back and forth. What are you gonna have for lunch today? It's crazy. Anyway, let's dive right into today's presentation. A lot of market movement today already. I hope you guys attended the early morning session that we did on YouTube. We talked about what the potential scenarios were, about how there was markets were probably going to be down. There's going to be a potential buy, but then overall, obviously, the news from this morning was not good for the markets. And a couple of the opportunities we talked about have already actually come to fruition and gone past. So if you guys don't know what I'm talking about, every morning Todd and I host a morning show on YouTube, 8:45 Eastern time. Just go to YouTube, search Nadex, click the bell, basically hit the subscribe button, and then hit the notification icon. You'll get the notice for it, and you'll be able to see the opportunities basically as we see them unfold. What's hot in the morning every day, Monday through Friday. So with that said, today's presentation is really a breakdown on a weekly basis. We're going to dive in and kind of look at where are the opportunities for the rest of the week. I will say right now, tomorrow is absolutely insane. There's so much that's happening tomorrow. There's a lot of news. A lot of the news that we're getting tomorrow is really dictating what's going to happen next in this COVID recovery. So a lot of opportunity out there. And I will say, it's pretty exciting. Nadex has a lot of different assets that are perfect for this environment. Obviously, low volume, right? It's December, but there is so much volatility right now. I think at one point today I looked and the VIX was up like 11% or something like that. Volatility spiking like that. This can be really, really dangerous for futures traders out there because if you get on the wrong side of this and this thing goes, buy account. And again, understanding the benefits of options with risk defined before you even get into a trade. If you don't see the benefits other than that, you don't really understand how to protect your account and use risk management. So yeah, a lot of cool stuff. A lot of good things happening. Of course, I have to click another piece there. Whoops. Um, there we go. So let's just go right into everything here. Let's click. There we go. All right. So for those of you that don't know me, I am the president and CEO of Keep Trading Simple. I've been trading since I hate to say like Y2K because a lot of people don't know what that is anymore. Um, yeah, I've been Y2K year 2000. So basically 20 plus years. Seen a lot of up, left, down, right, sideways, things like that. So there's a lot that you could, a lot that goes into this. I wouldn't say that this is something that is new. I've seen crashes, I've seen booms, I've seen bust cycles. So yeah, I mean, there's a lot out there. Um, One of the nice things from my background is my father was not a trader. I've never worked on a trading floor. I did work for one of the big three banks in the United Division, so I've seen some of the largest trading floors inside of the banking sector. Um, I love the markets. My passion is teaching. I want to make sure that you guys get at least one golden nugget from every event. Today is no different, and there's a lot in today's session today. Um, and one of the biggest things, we talk about, some of the courses that I've created. High volatility trading is one of them that we created when COVID came out. Just going to say we're in high volatility times right now. And this is why, again, not to give Nadex the extra plug. I know they love it, but at the end of the day, using options contracts in this type of volatility, in this type of situation, is as good as it gets. And in the next 6 months, when we start seeing rising interest rates in pretty much every currency pair in the world, that high volatility scenario is going to happen again and again and again and again and again. So I hope you guys are getting how important it is to be able to use these limited risk strategies. Okay. Um, before we begin, diving into charts, I do have to mention this Nadex risk disclaimer. You guys have heard this before, and all of you understand that trading on Nadex involves risk and may not be appropriate for all. Members risk losing the cost and other transaction, including fees. Now, you should carefully consider whether trading on Nadex is appropriate in light of your investment experience and financial resources. Any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results, and none of the material presented here is to be construed as a solicitation, recommendation, or offer to buy any financial instrument on Nadex or elsewhere. Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex is a registered trademark of the IG Group. Now, for those of you chiming in, I'm on a couple different platforms today. For those of you chiming in, if you guys are unfamiliar with Nadex, the way you find them is just nadex.com. You can get everything you need to know about Nadex. Today's presentation is going to be breaking down charts, looking at analysis, looking down basically the rest of the week where the opportunities exist. You don't have to use Nadex. You can trade these in any asset class you like. I like with the limited risk right now. I think it's the ideal opportunity. And if you're not trading it, it's a great opportunity to get introduced to it. So first, we're going to cover the upcoming news events. You guys know I absolutely love my news trading. I feel like I need to come up with some type of meme t-shirt, sweatshirt, some type of merch. Everybody's got merch right now. Tesla now has merch that you can buy with Dogecoin. That's what Elon mentioned this morning. I'm going to get some news trading merch. Uh, it's the best. It's absolutely the best. All the movement today is because of news this morning. If you're not sure why the markets are crashing, you don't know how to find news trades. And it was super easy setups today, so we're going to cover the rest of the big blockbuster news events for the week. We're going to dive into indices. We'll talk about the trade setups that we had starting this morning, as well as what we're going to probably have the rest of the week. But in particular, how do we handle FOMC tomorrow? We're going to cover forex and what the market is doing. Again, a lot of this is very dollar strength based. And commodities. Now we'll cover gold, silver, gold and oil. I'm sorry, oil, natural gas, and then the two crazies, gold and silver today. And again, gold and silver, very interesting time right now. Reason why is because we're at the time where we're going to start smashing inflation. And guess what? Gold and silver are a way to hedge for inflation. So kind of an interesting scenario. Designed to hedge, but we're about to crush it, or we should be crushing it. We're at a 39-year high, so it's time. All right. So let's go right into what we see for the rest of the week. All right. So again, on the currency front, we'll come back to this. In the currency front, everything is kind of just leveling out right now. And again, 100% expected with FOMC tomorrow, talking about when we're going to start raising interest rates and what it looks like. You're seeing a lot of things, kind of retrace back a little bit. You've seen the dollar Swiss pull back a little bit. Euro dollar, again, starting to pull back a little bit. Some profit taking happened here. Same thing with the pound, a little profit taking. But the news I was talking about this morning is this PPI. And again, you don't need to be, an economist or have a degree in economics to understand why it's important. All you need to do is go to your favorite news site. You can use Forex Factor. I use that because predominantly I like to look at currencies. You can use Daily Effects. They even have more listed. And again, they have a notifications system there that if you like notifications and like to know when the hot times are, you could actually use Daily Effects' calendar to set notifications that literally will send you an email and say, hey, we're about to have a trading release. Get on there and look at some charts. So again, very cool functions. But PPI blew the forecast out today. Okay. For those of you that don't know, PPI is the price of goods and services produced by the producers that sell to us for higher than normal prices. Yeah, this is a sign that inflation, again, it was expected to be lower. And guess what? Versus what it was before. Remember that term that I joked about for months? I'm like, I don't think they understand what transitory means. And then they finally, last week or 2 weeks ago, they supposedly, quote, retired that transitory term. I mean, we've seen it since the beginning of the year. Really, I mean, as of the summer, when Yellen was like, yeah, we should see it end in July. Yeah, it's just getting worse. So it's time for action. Interest rates are going to be making this market really crazy. Now, tonight, we do have one speech and then Chinese retail sales. You may say, well, why do I care? Why do I care about retail sales? Well, retail sales in China, very, very large economy. This is going to affect some of those commodity prices. Basically, gold, silver, it'll affect the Aussie because, again, they get a lot of natural resources from them. And remember, China is technically supposed to be ahead of us in the recovery from COVID. We don't really hear a lot of data. They don't report data the same way, and people question a lot of the numbers. There's a little bit of banter between the United States and China right now. As far as, we're going to put some economic sanctions, and many countries at this point are throwing on some economic sanctions because of the human rights issues over there and the genocide that's occurring. Nice, important economic figure there to look at. Tomorrow morning early, and I said Wednesday is insane. So this entire gray area, this is all the news tomorrow. This is a lot of news in a day, and there's a lot of red in here, okay? I don't care what asset class you're trading. There's going to be movement tomorrow based off of what we see. Now, if you are a currency trader or you're overseas, I'm an East Coaster, so trading at 2 a.m. in the morning is a little bit hard, particularly with a 2-month-old. You guys know how that is with little ones. Year over year, CPI of 4.8. It was last reading 4.2. So again, the target rate is 2. So 2.8 is higher. There has been some news out this morning from the UK. And again, here's the whole IFM reading. A couple things they talk about. It's been a challenging year for the UK, but the strong policy support and economy proved to be resilient. And again, talking about how this is interesting. It became clear that COVID-19 and the behavioral changes it has caused will not fade quickly. And again, they mentioned Omicron in here. The UK seems like they are most exposed to Omicron. Um, Outlooks talk about, strong in the near term, and price pressures are there. Monetary policy needs to be withdrawn. They need to withdraw the exceptional support provided during 2021. Again, tapering and rising interest rates, right? Because inflation is going to be a problem. And there's a bunch more headlines in here, basically all the black ones. You can find it. Again, it's right on imf.org if you guys are looking at it. So, again, big important number. I like it too because tomorrow morning, the UK session is going to move the market in some crazy directions, preparing for the FOMC economic projections, FOMC statement, and federal funds rate, right? It's going to prepare us. And I don't want to say the UK market is going to manipulate it, but they're basically just positioning price to get better entries for what the data that's already coming out. Now, 8:30 a.m., we got some big blockbusters as well. CPI month over month for Canada. Question is this point two overly pessimistic? Right? Is this overly pessimistic? What if it comes in at 0.4, double the inflation that they expected? Well, guess what? That gives us some Canadian strength. This is already moving up. That's lining up perfectly for this to turn and roll back over. So we have CPI on a month-over-month basis. Then we have core retail sales. We know inflation's really high. They're expecting maybe 0.9. What happens if this comes in at a 0.6? Now, again, if it comes in at 1.7, wow, we blew core retail sales out of the water. Man, that should be positive for the market, but then a couple hours later, it should get crushed. This will be a good one for the U.S. Again, this is going to be the CAD CPI is going to be a dollar CAD currency trade, or again, for those of you that are spot traders, that'd be a CAD yen play because again, it removes a lot of the dollar influence from it in the CAD yen. But retail sales and Empire State Manufacturing, absolutely without a doubt, this is going to dominate the opening tomorrow for indices. Now, is it going to be as big of a movement, as normal? No. The reason why is because everything happening down here at 2 o'clock. But it is going to set the trend. Again, if it comes, it's expected to be 0.8, and this comes in at, say, 0.2, much worse than expected, man, it's going to be a red day tomorrow. Okay, it'll be a bad red day tomorrow. But hopefully it comes in a little bit higher. We start off with green. I would love for this number to be positive, jack price up just in time to come up to a level so we can short it before FOMC. Because like I said, I think they're going to drop the hammer here pretty soon, especially with the PPI today being, almost double what, the core being almost double. Yeah. Yeah. It's going to be, Jamie Dimon sitting over there going, I told you, but nobody listens to me. And then obviously 2 o'clock FOMC Fed funds rate. It's not going to change. Put it this way, if they change it, there's going to be a lot of people expected, and the markets are in serious trouble. I don't think they're going to change it. I do think they'll keep the 25. I think they're going to start laying out the schedule of how fast they're going to taper. The general public right now believes that it's going to be March, right? March is when we will wrap up taper, and the first rate hike will be June. Question is if, the tapering does not control inflation and we can continue to go higher than what we were. Big question is this, instead of being a single raise, the 0.5, will it go to 0.75 in its first raise in June? So about to get crazy. And again, this right here, the press conference, I think there's going to be some craziness. Now, GDP quarter over quarter expect to get blasted. And remember, they've already raised interest rates over there in New Zealand. So we'll see kind of what the New Zealand numbers look like. The 4.1 may be a little bit overly pessimistic, but I think that's okay. And that'll bounce right into tomorrow night at 7:30 p.m. Employment change. Look at this. The Aussie is supposed to blow it out of the water. Unemployment rate dropping by 0.2. And remember, our numbers were phenomenal. Employment change, that's a big difference. They lost 46,000 jobs last month, gaining 200,000 jobs. This could be a big boom for the Aussie dollar, right? Or the Australian currency in general. And again, after FOMC, wherever that bounces prices, this could really drive the dollar down, meaning the Aussie dollar will skyrocket down. And then profit taking just happens to come in a couple hours later when Australia all of a sudden gets great numbers and then bounces back up again. So two awesome potential trade opportunities. Thursday morning, again, look at all this red in here. A lot of this is kind of, it's a lot, right? 3:30 in the morning on Thursday, Swiss policy. Again, that's always nice to know. We're going to follow it up by manufacturing services PMI, also high importance. Swiss press conference, great. All this is in the middle of the night, so it's not stuff that I typically trade. But 7 a.m. on Thursday, what do we have? All the pound data, right? Monetary policy, bank rate, not expected to change. We just heard over here that they said we're strong, but we need to start changing. We need to withdraw the exceptional support during 2021. Well, guess where they're going to release what that is? Right here, 7 a.m. So how do you play it? Pound dollar, euro pound, pound yen. Okay. All great options. And then again, monetary policy right behind it for the euro. And again, the euro, I expect them to be a little bit slower. They have a lot of different countries. They had some lockdowns. You had Austria involved. You had Germany locking down areas for Omicron. And remember, really the only country that's really seeing effects of, major countries that are seeing effects of Omicron is the UK, right? This morning, if you were catching any of the news outlets, they were, interviewing doctors and talking about how Pfizer had some good data for a pill. It didn't meet its primary endpoint, but it showed reductions in hospitalizations and deaths. But it was a study of just unvaccinated people. So it reduced hospitalizations and deaths by 70%. And the doctor was like, hey, as far as I'm concerned, right, the newscaster asked about Omicron. The doctor's like, honestly, I have no idea. I have not seen Omicron yet. Everything we have in the surge we're seeing right now is nothing but Delta people, not Omicron. So she's like, I really can't, I don't really have an opinion. It's not in my wheelhouse yet because I'm not seeing it yet. Everybody I'm seeing is Delta. So very interesting. That's why I think euro will be a little bit behind. There'll be a little bit more euro weakness. And then we have some unemployment claims last time. Yeah, it was good, right? We have manufacturing, some monetary policy for Japan. And then Friday, we finally get a little bit of a breather. 2 a.m. retail sales. And then Waller is speaking. We may get one or two headlines. So again, the way it's setting up right now, if I had to make a projection, I would say that tomorrow I don't think is good. I mean, today obviously not good for the indices. This is way too high. Tomorrow, again, not looking great. We all know what's coming. So again, the only thing that may be a saving grace is if a lot of this is already priced into the market. And again, I think a lot of it today is going to be priced in. But it's hard to say when they say, yeah, we're going to start raising interest rates. We're going to curb inflation. It's way too high. I mean, retail sales is the only saving grace for tomorrow. I feel like tomorrow also has the ability to be red. Thursday, probably a little bit flat. Maybe manufacturing index comes in good. And then hopefully, because there's really nothing, if you guys have ever heard the no news is good news, it may give us the ability to get at least a green Friday. I'm not saying we're going to overtake today. And yes, today and tomorrow's kind of, slathering, but, I feel that it's there. As well as, and again, I didn't mention it. Where is it? It would be at 10:30. Looks like they pulled it off here as a high impact release because this is this. But we have crude oil inventories, right? Crude oil is where a lot of the, one of the biggest, reasons why we have inflation right now is oil and natural gas. And again, that is going to be Wednesday at 10:30. So even for commodities traders, again, we have that as well as natural gas has been, natural gas has been up 2%, down 2%, up 5%, down 3%, over, that has been extremely volatile too. So that'll be on Thursday this week, on Thursday morning. So every morning this week, this is an action-packed week worth of news. Sometimes I'll look and be like, wow, there's nothing here, right? Like that dry ice guy. There is so many blockbuster headlines. This may be the best news week in all of December. Okay. So with that said, let's dive right in the charts. Let's see. We'll click over here. And again, I was looking at kind of see, Apple and Tesla. If you guys are looking on how to trade NQ, Apple and Tesla are a great way to do it. Literally, if you did nothing but look at these two, you can pretty much tell what the NQ is going to do. And that's why I had those up. But I think first and foremost, we need to talk about the VIX. Okay. Yes, you can get VIX options out in the overall kind of general public of things, but the VIX is one of those things. When VIX is green, and again, 12.46% today, 2.5 up, that's a big move, and a lot of that is because of PPI in anticipation for what we're going to see tomorrow. And you can see, I mean, looking at how the volatility is increasing. If you guys can see the performance on the right hand side, bottom right, just take this in for context, right? On a weekly basis, it's up 2.4%. You're like, it's not bad, right? 1 month, the volatility index is up 37.7%. Imagine if a stock moved 37%, how much people will be talking about it. Again, this is green, tends to be bad for the market. 3 months, 22, 6 months, 26%. Year to date, it's only down, it's down 0.4, but it's just showing you, I mean, wow, right? We went all the way down, right? We went all the way down. Year to date, it's only down 1%, 1.4%, which means not in the last 6 months, the volatility is ratcheting higher and higher and higher and higher and higher. And again, we haven't even started raising interest rates yet. So yeah, again, huge gauge on what you should be looking for on the day. Now let's go over to the ES. Now let's drop this down to a 15-minute. So yesterday, again, we were sitting back in this area and we talked about a potential setup, right? We talked about this green box being, like if we break 4,700, we got a racetrack down and there's nothing here, right? And we had a level of basing here. It was tested. It got tested again and broke and came back again. And we said, listen, this is a nice little end of the day crash. Nice little setup here. And what happened? Europeans stepped in. European session open is right here. So what did the Europeans do as price drove back up to that same level at the close of our business? They shorted it again. And then what happened is this morning, right? Profit taking kicked in. We knew we had a level. And again, it was already a short, so it wasn't an area we wanted to go long off of. But you can see it respected those buyers and bounced right back up again and started forming a new level. And then at 8:30 this morning, again, how do we know we had a news release? We looked at one of those education sites, or one of the informational sites for economic news releases. And bam, comes crashing down. Now, if you attended our session this morning, which occurred right here where these two little dots were, right? Here's our 1 to 3. So we know we cleared it once already. I mentioned at the open, there's probably going to be buying opportunities today. Overall, I said it's probably going to be a red day. That data is just way too strong. But I said there's going to be buying opportunities. Well, this is the perfect example of a retail trader trap right here. And what did it do? It literally, not only did we have the first trade punch through, we had a second attempt and a second punch all the way through down. And again, we talked about this would be the big one, 4,600. We got it, this would be our target down here, big psychological level, and we're literally riding across the top of it right now. Here is the trap. Okay, so take note. This could be your golden nugget. When you hear nothing but horrible news and you watch this thing spike right down again, do not buy, do not sell at the open. Right? Absolutely do not sell at the open. Okay, why? Because everybody and their brother is trying to sell, and guess what? All these people that shorted it before the news release because they knew the PPI was going to be a big one, they're trying to get out of their position. So what are they trying to do? They sold first. They're buying it back, right? So as you are trying to hit that sell button, you are getting them out of their trade for money, and as price goes higher, which has happened, you're losing money. There's your opening trap, and then right here, right, what happened? It spiked up again. All those people trying to get in early at 9:30. By 9:45, your stop losses have been hit, and these people are like, this is perfect. Right back up to where we started. Let's go. And bam, 2 runs in the same day on the same product. ES is down 1.2% right now. And again, we are basing around a psychological level. It is 12, so I did expect it to slow down. And I was curious whether this would be a full reversal. It wasn't. This is a big move for the day. Again, 1.2%, 56 points down on the ES. I do believe right now it is above a daily. Let me check. The daily, where are we at here? True range. Yeah, the daily ATR on this one, I hate how it does on this bottom. The daily ATR is only 53. So we're down since the open 55 points. We are over 1 day's worth of movement already since the open. So what I would expect at this point, probably some basing. Again, 4,600 is a big psychological number. That's why it came down magically and just kind of stopped. You can see here, it was a level here that we had some basing in the past and was a big selling point. Again, it hovered around back and forth again, was a top for a while, was a top again, then all of a sudden became the bottom. It's a level that the market is going to like. Now, the question is, where would it continue to drop in? And I would say there are some buyers right below it. They're not great buyers. And again, some chop back and forth here. I mean, really the last decent clearing is really all the way down here at what? 45.33. Yeah, so I mean, we'll drag that across. That's a lot of room. I mean, that's obviously seems like a far distance, but with everything we have going on tomorrow, I mean, I feel like we could absolutely get down there tomorrow if they talk about, listen, we need to really get aggressive with this. We need to get inflation under control. We'll do it by any means possible. I mean, it's a political thing at this point, right? President Biden's approval rating on the economy and the way he's handling inflation are basically an all-time low. His own party, I think 56, what was the thing? 56% of people in the Democratic Party say he's doing it wrong right now. So again, it was like 94% for Republicans. So it's not good numbers for him. So they need to get this under control. None of those statements are good for the ES tomorrow. So could we get all the way down there? Yeah, absolutely. Um, Very curious to see again. One, we'll see what the afternoon holds. This has been straight down. I wouldn't be surprised if some profit taking comes in. What I would say is, I think it's going to be really, really important. And again, if you're an end of the day trader, yeah, there's going to be some opportunity. I think it'll get a little bit nuts later today. But I think in preparation for tomorrow, the best way to play ES, and again, drop this to a 15 minutes so you can find this opportunity tomorrow. Again, European Open. Let's see where the Europeans send this market tomorrow, because that, again, if any opportunities where this is being pushed up could give us a great short tomorrow before FOMC. You may say, wait, but you don't know what they're going to say. No, you're right. I don't know what they're going to say, but I do know that they have the ability to provide fireworks, and everybody is waiting for fireworks. We could get a disappointment and they say nothing, but at this point, I would be very surprised if they would say nothing. Because at this point, I mean, it's things are getting. If they say nothing, they start to lose credibility even more than they have. So, in preparation for some type of a move, there's many ways to play this beforehand. If they pull up, I think we're looking for an opportunity. But check out the European session, particularly in the ES, right? But right now, I think we hold 46 for a bit, and then again, 45.50 would be the next big psychological level. I'm looking for good zone formations for shorts for tomorrow in ES. Now, NQ, yeah, so we had this one. You guys all know this pattern, and unfortunately, we didn't. Did it take us out? Oh, it did. It did push past. It just did just a little while ago when we started. Mentioned this one earlier, and here we'll put it on the 5 minutes so no one thinks that I'm cherry picking this one. Again, here's the pattern. There's your Harry Potter. There's your base. There is your pullback, and there is your drop. Right? For those of you that are new that are like, what the heck is he talking about with a Harry Potter? I've never seen that indicator. It's not an indicator. Basically, a Harry Potter is a confirmation pattern. It's a momentum breakout or a momentum continuation pattern where price is basically breaking through to old areas of buyers or sellers, pulling back and using that level as a risk level in a continuation of what its current trend is. Well, that's exactly what it did. It came down. It based here the 11 o'clock time frame. It came back up at 11:30 and then pushed all the way down to the target. So, again, nice little setup. We had called that one earlier today. If you guys got it, we talked about the break of 1582. Again, depending on the platform that you guys are using out there as well, you may not have been able to use. Yours may have been slightly different. Remember, each brokerage, depending on when their candles actually print and open and close, may be just a little bit off. So your number may be slightly off. Again, this is what TradingView's data. But again, nice little push down, and I would say the same thing. For today, I would say that 15,700 is probably on the radar. Let's bring this up to like a 2-hour. Yeah, you can see that we really don't have amazing buyers over here. Oops, I didn't want to move that. Really until this level here. Let's see where that's at for tomorrow. 15,600. So we're at 15,762. They get aggressive at all tomorrow. I mean, NQ is already down 2% right now. And that's down 318 points. Let's see. What does 318 look like? 318 looks like that. So let me draw a box around that. Basically to there. I guess it was there. So if we end up just a little bit lower, you guys can see that we are really just one day short of 15,600. How about that for a week, right? Starting off the week all the way up here at 16,000, actually higher, 16,000. I mean, yesterday we were at 16,400. Can we get all the way down to 15,400 or 15,600? It's a heck of a drop in 1 week, and again, all interest rate related. Okay, so yeah, I would say kind of the same thing for the NQ. Now, again, remember NQ is more of a COVID at-risk asset, right? Futures contract. With lockdown, technology is there, but I would say right now, again, the way to look at this one is look at the volatility, but definitely look to see where Apple and Tesla are gapping. Think it'll be a great trade setup tomorrow. And again, do I think it'll be the weakest tomorrow? Probably not. I think YM or Russell will be the worst tomorrow, but NQ right now is being led by Apple and Tesla. Now, YM had a bit of a jump. This was the crazy one, and right here, Here is the opening print. And like I said before, this was a harder one because we know we have an area of interest right around 35,500. And again, it's an area that we've had. I mean, it's bounced here, bounced through and chopped it again, came back up and ended up pulling back and touching it, get yet again. But here's the opening print. And, when I talked about this earlier, I said, hey, look for buying opportunities today, right? Had you saw and heard the news and saw PPI and said, nah, the market's red today. I got to sell this. If you sold at the open, look at the opening print. I mean, here's the opening, here's where it opened right here, and it exploded higher on you. So, there are people out there that are like, I don't know what happens. I look at the news is bad. I sell it and it goes high. Why? Okay, well, you got to understand the market participants. Everybody knows that you saw it. Everybody knows that you saw this big down run in price. You saw red across the board, the VIX, so again, you selling it went right into the wolf's hands. And once you guys got stopped out, couldn't take any more, is when it rolled and flipped. And it's basically where we started. I mean, in reality, this is where the market opened. This is where we're at right now. There's your 930 candle. Here's where we are right now. We're exactly where we opened, right? So all the down movement was from where we closed from yesterday. But what did it do? It spiked up to grab levels of basing and continue to push down. Now, the tested level did get blown through. It gave it a little bit of a hiccup on the downside, the 554. Again, this is one of those ones, using a limited risk product, with it down here, as price spiked up, we were talking about getting an entry here. Guess what? Had you used a 10 to 12, 10 o'clock is right here. There's where the 10 o'clock candle opened. 12 o'clock is right there. There's your low on the 12. How about that for a range if you used a short duration or their binary or call spread based contract, right? Either one of them would have worked. We knew we had sellers up top. We didn't pinpoint it. Even if you had gotten in right here, as price spiked higher to the next level, which again, it could happen, right? But again, 10 o'clock has already started the reversal part of it. All you're doing is playing the opening retail trap to the downside. Okay. So again, some decent opportunity in that one today. I think YM is going to probably be the most at risk tomorrow because I think rising interest rates will hurt the general, really manufacturing in general. But again, how about that for an opening trap today? Hopefully you guys were able to take advantage of it. And again, in the early morning session, we talked about taking this one long at the open. Again, trapping everybody that, again, was in the know, that saw PPI and saw the market crashing in the futures market and said, yup, I'm jumping in, man. I'm riding that trend. And then, then they got hit in the other direction. Now, Russell also had kind of a similar scenario. Now, Russell had a couple different levels, and none of them were really, really clean up here. It had the same thing. 930 candle is right here, right? 930, it exploded forward. And again, the 930 candle opened right here. And you can see where price is. We're right here. We literally just banked off of it. So it's not much different than what we opened. Had you saw PPI, known that they're going to crush the market, and then saw all this downward pressure, and then you tried to sell, man, that hurts. That hurts all the way back up again, right? And then you got out because you're like, I can't take any more. I've lost my account. Everything's gone. I lost it all. And then it came back right down where you thought you needed to be in the first place. So, yeah, again, pretty common. Let's see where this one could potentially be halting. This one gets pretty ugly here. We know we got a level at 23.13 or 23.18. I'm sorry, 21.38 right there. And again, that's probably going to be more of a target for tomorrow. I do feel that the Russell, again, they come up with very hawkish comments. The Russell being the small guys out there, I feel like is probably going to get hit pretty bad. For those of you that don't know, like, well, why would the Russell, right? So interest rates affect businesses in different ways. Typically, businesses operate by borrowing because, they need to borrow the money to build things, but don't get paid until it's produced. So they're constantly borrowing and lending and moving money back and forth. When the cost of, again, interest rates are the cost of borrowing. The higher the cost of borrowing, it does hurt small business more than it hurts large business. So it is something that you kind of got to watch out for. Again, something like Ford, right? Ford is pretty insulated. The Targets, the Walmarts, they're pretty, the big companies, the big names that you hear out there, they're pretty protected against this. I mean, they're kind of like their own banks, right? They have divisions that are inside of their own banks. But the mom and pa's and the smaller companies out there, the people that make up the Russell, when interest rates rise, it does hurt them. Lending is, when you need some float to pay your employees before you get all your accounts receivable in, when that starts getting more expensive, it starts hurting from the bottom line because you got to pay for it from somewhere. And again, the things that they're producing, the small businesses are producing, are already overpriced. We saw it in PPI. But now to borrow money to pay the people that built those overpriced things, you got to pay even more. It just stacks another log on the fire as far as reducing the overall, revenues that these small companies are getting. So I feel like when we start talking about not only tapering, pulling support from them, but rising interest rates, I think the Russell is really set up for. And again, Russell has been something that since the week opened, I got sent an email and asked if I could do like weekly positions. The Russell is definitely something that Sunday night I would have, everybody should have been looking for weekly positions on a swing nature, a swing time frame to be taken short because nothing, COVID comes back, it's going to hurt Russell. Omicron comes here, it's going to hurt Russell. Cutting tapering hurts Russell. Rising interest rates hurts Russell. It's just none of this is Russell positive. So again, this would have been one of those kind of long duration Sunday night trades where the Russell would have been the absolute best, one of the best things to get short because there was really no scenario that helps the Russell, right? Again, I mean, think about it. I mean, just different things out there. COVID is cured, right? Wonderful. Inflation's already high. It's only going to get worse because now we have no worries, right? Because everybody wants to go out and buy things, right? Again, hurts the Russell. So, you know, pretty easy weekly base trade there. Let's dive over and let's look at currencies because, again, this is going to be the next piece of this one. So, had some targets that we were looking for. Let's drop it back down to a 30-minute one. So, obviously, this one, again, all the currencies right now are rather muted, right? You may say, but you just said that the markets are crazy. Yes, I did. But I also said that FOMC, again, interest rates is tomorrow. PPI is not necessarily, the Aussie or the pound. Again, it's a U.S. thing, right? 27 is not a lot of movement. 3 is definitely not a lot of movement, right? The dollar CAD being up 63 is the biggest piece out there. And the pound yen, the biggest mover of the big 8, 33, that's nothing. You're right. Tomorrow is all the big news. The PPI is just a U.S. based release, and it's kind of in preparation for tomorrow. So Aussie dollar has been kind of channeling. And when I say channeling, I mean, we kind of have a top, right? We got a top sitting right here. We had a zone that, again, this was our target. We said, depending on the bounce, there's probably a long in here. But again, it's a target first, and you can see it kind of bounced off and then sliced through. That was our target. We were looking for some type of a base, and we didn't really get the base. The reason we were looking for the base was looking for the short opportunity. All it did was kind of stab through and kind of push back up again. And again, there's obviously a level of basing. We can see it before it based and then popped and then retested itself. So this would have been a yesterday close of business. And then again, this morning, the Europeans stepped in here. It wasn't quite the entry. I actually had something a little bit higher. Didn't get into the position and it left without me and went down. So, those things will happen. For those either new to watching, I'm an if this, then that trader. My if this was up here and it didn't get hit. And that happens. And right now we're seeing lower highs and higher lows. It's just consolidating back in. So not much we can do with it right now. There is kind of an interesting setup that I am looking for down here, right? The reason why I'm looking for it down there is we had a little bit of basing. We kind of had a pop, like a very fast test of it. We hit it and took off, but then we just hit it again and took off. I don't know when it's going to come down here and break this zone. Tomorrow with FOMC, if they say, yeah, our first interest rate, our first hike is not going to be a 0.25, it'll be a 0.5. That's going to bring massive amounts of strength into the dollar. That's going to shoot this Aussie dollar straight down. So one potential setup that I have for later this week is really looking at a break of this level here. My 1 to 3 is there. So you can see my 1 to 3 is good. My profit target is before, my 1 to 3 is before the profit target. That's what we like. But we're looking for a break of approximately, and I say approximately because currencies, depending on your brokerage firm, they'll all be a little bit different without that centralized exchange. But really looking for a break of 70.82 and looking for that to come down to here, being a profit target of approximately 70.56. Okay. Now, again, if you're looking to play this one, it's going to make me do it over here. Again, set an alert. Let's see. Aussie USD Harry Potter short. There you go. Bam. Now I'm going to get an email when it breaks through so I know I can get into that position or not. I think it's a good one. I think today if we come down and we start the base, kind of the same thing we were looking for here. If we can come down and get that base, yeah. I mean, we're in. We're looking for something there. So let's see. Do I need this now? Touch. I should leave it there. I'll leave it there for right now. it's respecting that level too much on both sides. For profit targets, I'll probably keep that one for later. But yeah, so for right now, that's a potential trade setup for later in the week. Aussie, yeah, and remember too, let me do this real quick. Let's pull none Aussie. If you're a nighttime based trader, Wednesday is going to be the day for you, right? Not today. We have the unemployment change tomorrow. It's a blockbuster, and then next Monday, monetary policy. So for those nighttime traders, here's some good opportunity for nighttime trading. And I would say again, our profit targets. We had the 80.68. Again, we hit it. We based through it. We came back up. Unfortunately, this one had the same kind of scenario. It got close. Depending on your broker, you may or may not have gotten in. The 3 o'clock candle for this one is right here, right here. So it kind of missed the entry, and all it did was really force it back down to the opposing side. I don't really have a buy on this one yet. You know, this is a level we've gone through, but I don't like the Harry Potter. There's a little bit of a click here and a little bit of a click sitting right in here. And I'll put rays on there real quick so you can see them. There's the one right there, and there's the one kind of right there. So unfortunately, there's not enough room for me to use that risk level. I do like below this level, though. I do actually like this for a short. Let me make sure I got that on that bottom. Yeah, I did. I do actually like this. There is a 1 to 3 down here, and it may be something for tomorrow as well. I believe when I had this one drawn out, I had this on my watch list, but I wanted to make sure. Yeah, our 1 to 3 is sitting right there, and again, below our target of 80.02. Okay, so here we'll extend this across. Let's see. Oh, that's close enough. There we go. Now it's level. So yeah, just slightly off. What did I say? 80.02.3. 80.03. There we go. Now it's dead on. So yeah, and that would be a break of, let's see, 80.31. So small base trade. But again, this would be a yen-driven pair. And again, with the Aussie news this week, I think it's a decent target to the downside. Top side, again, this is confirmed now. So again, if you're looking for a short, you're trying to put something in both directions, you could absolutely do this too up top. If we're at a session open, or again, by some chance, if we rally all the way up to this level, right? If we continue to push up tomorrow for European session, 81.15 could also be a good opportunity to short. Euro pound. All right. So you may wonder on this one, why do we have this drawn all the way down and the price isn't there yet? This is kind of a forecasting with fibs. I do love this level down here at 84.50. And when price comes down, this will be the big draw. And I was kind of trying to figure out where the 50% would be. And again, I was hoping we didn't get the pullback. I wanted it to continue to grind. It didn't quite get all the way down there. So we're drawing this in hopes that it was down. And we're just not there yet. Like I'm doing basically future planning. It's not a trade setup right now. It's just not there yet. Now, if you're moving current fibs, this is what it looks like. We've hit that 50% twice now, right? Again, driving the fibs from here. And we talked about this yesterday morning. We knew we have a level kind of sitting up here as well. 50% is right there. Had you taken either 50%, I think actually, I don't know. Maybe here, we'll use this one real quick. Had we use a standard 50, 61, 8, what we've got now? Yeah, actually, it would have kicked this morning. European Open was here. Typically 5:30 is the reversal time. There's your 5:30 candle right there. The 5:30 candle is actually the green candle sitting right in the middle. So again, had you been using, let me change this real quick. Fib, style, change the 50 to black so we can see it better. There we go. Had you been using the 50% entry with the European reversal time frame, 61.8 is your stop loss. Your profit target, again, a lot of people use the 23.6, but that's a little bit less than the 3 to 1. You can see the 3 to 1 would have been down here, and again, it came through and hit. So it's a level, definitely watch out for it. And again, as I said, the fib forecasting, that's why we have this lower one here. We're waiting for this one to kind of set up in the future. It's not quite there yet. But had you been using the current fib levels, euro pound, again, nice little run of this morning from the European reversal time frame. I would say you could use something up there again. Whether you use the 50 or even maybe a little bit slightly higher, it may go just a bit higher to retest. Maybe up here at the 85.54 with all the news. And again, click this off, do euro, do pound, and go there. You can see how much data tomorrow. Pound CPI, great. It's expected to be high. I'd be looking for this the short. So if we can do all profit taking back or finding a basing, I think tomorrow morning we look for a short in that position. And then again, look at this Thursday. It's all the flash manufacturing, all the asset purchases, all the monetary policy, the official bank rate. Then we have the Europeans stepping in for their refinancing rate, again, expected not to change, and also the monetary policy. So tomorrow morning is really, and then again, retail sales on Friday morning. So chock full of European news on Thursday. Again, looking for this to come down. I do believe that all of this will bring more UK strength in, particularly with the IMF statement that we saw this morning, right? And that's again why we had the big drop. Euro yen. Yen looks very similar. And again, there was a zone sitting back here. This is really basing a lot. It wasn't something that I was really super excited about. I mean, European session opened here, and all we did was really just drive up, grab the zone, which is sitting right there, right? There's our zone. There's our level of basing. You can pull this on there. If you love fibs, you can also grab your fibs and put it down. And again, if 50 was your entry when it based, you're like, yes, 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 yes. You took a little bit of heat. And again, if your 61 stop loss was there, you can see it's already pushed down, and then the 23.6 is there. So actually, it would be right there. Again, doesn't really change much, but all this was again, that 5:30 time frame is the European reversal. There's your European reversal time right there's 5:30. It's right there, right? So again, European traders would have been able to grab this one. In reality, European session market opened there, and we're sitting right in the same spot right now. It's moved 0.07. It's not really giving us a whole lot of trends. Euro yen would be something you can trade on Thursday with some of the manufacturing numbers, or the monetary policy statement. But right now, this is being more dictated by the yen than anything else. Okay, but again, pretty easy setup in the overnight. Have a Harry Potter much, much lower when it finally does break out of this channel. But again, we have an alert set. When we break 127.36, looking for that to drop all the way down to 126.88. All right, with a little Harry Potter confirmation. Okay. Going to euro dollar. So euro dollar, I like where this one is setting up. So mark this one off. I told you guys, again, this was a 5:30 reversal, right? 5:30, 10:30 are the biggest reversal times, right? We knew we had a zone up top. Unfortunately, it was a little bit late to get in for, when we talked about it. Here's where Todd and I were starting to talk, was right here, this 9 o'clock window. We mentioned it come all the way down, and it did it rather fast. So we're there now. Now, I do have an area that I like here. We had a break of 112.60, and we're looking for this to go down to 112.34. Reason why we liked it is because we had the original zone, and we had one touch. We had two touches. We had three touches. And this morning, we had our fourth touch, and now actually we are in our fifth. So I'm looking for this area to break, and again, the same type of confirmation punch through. Decent target, but again, it's getting short at 112.59 or 59.8 or 112.60, depending on your broker term. You can round up a little bit. Looking for a target back down here at the 112.34 figure. So again, another trade setup. Pound yen. Man, I was really hoping this would go all the way back up. I really wanted this one for news time to come all the way back up. It didn't. It got really bogged down. So I think too much of it was, too many people were set there. I still think it is a, whoops. Let's go back to, no, I don't want that one. I want this one. There we go. Still think 151 is a decent level. I do think we will get a bit more of a spike. At this point, at this point, I would like this one to continue to push lower. I think when we get the policy statements from the UK, I think all of those, and again, the UK's already said we need to make the changes now. I think all those are hawkish. This is not a huge move. Not many people are looking at IMF statements for hidden news on what's going to happen. They just look at the overall, data in here. I think we have some great opportunity now. We do have a target level down here, the 149.52. I think we could use that. And again, you can see the news kind of speckled out down here. This one has been very range bound, unfortunately. And again, big ATR on this one. The ATR is currently at 112. So you can see right now as we're planning, 112 is its daily ATR, the movement one. It's only 30, right? So it's 25% of what it's supposed to do in a day. All it's really doing is kind of, bouncing kind of sideways in this channel, but we're waiting for some type of an explosion. I like to the downside. I like longs from 148.75. There's a couple levels up top. Again, we got to see what the proximity looks like, but there's a couple decent levels. The 151.46, the 52, 152.27. The 151 is a big round number. It's not 150. 150 would be huge, but 151, it's there. It's close. I think it's still something that we need to kind of focus on. Will this level hold if they say, yeah, we're going to raise a double interest rate or something like that? Probably not. We're probably looking for some type of a pop and target up top. But really, right now, we want price to come lower, give us a great buying opportunity to get us long before that news release. And again, the market's already closed, so I don't expect it to do much. It'll probably kind of roll back down again. And even so, you can see that we had the little confirmation bounce from this original level. So yeah, it's more or less just channeling sideways. When you're moving 25% of your daily ATR, that's not really a big day. Pound yen. So pound yen had a yesterday morning had a great open, right? Shot us all the way down, and we really kind of came to the other side. You can say that, hey, listen, there's buyers right there, and right? We hit it there. It was confirmed, and we just literally shot up. So see, kind of the same idea. We are basing sideways. We've really been in this channel. On a daily basis, the ATR on this one on a daily is at 91 pips as its daily ATR. It's moved 26. So kind of the same thing. 25 to 30% of its overall movement is preparing for tomorrow. Okay. It's preparing for tomorrow. Now, same thing. Pound dollar. Yes, I do think we will get some pound strength coming in, but as this continues to creep higher, I think there are awesome opportunities to sell this one. You may say, well, wait a second, you just told me to go, the other direction. Yes, versus the yen, versus the dollar. The US is farther ahead. We have more vaccinations, we have more people. Again, I think that we are at a stage right now where the flight to safety will be more towards the dollar than the pound. They lost a lot of steam with Brexit. I do think dollar strength comes into this market. And again, if the pound shows any weakness whatsoever, I think the strong dollar takes this one and pushes us down. Now, we do have targets for shorts, and this is a level that we've hit a few different times now. It is a bigger level, the 131.76, so it's a bigger psychological level. It's something we need to watch out for, but at the end of the day, I don't know if I would really want to take a long off of it. I really would kind of want to see if it starts the basing, if we need to be creating short positions. You can see right now, look at all the news that will affect this pair over the next 2 days. So there's a lot in there. I think, again, I think the important times to look at this. I mean, right now, I wouldn't say, oh, this is good, this is good, this is good. I think all of these trades are going to be time based. What I mean by that is 3 a.m. in the morning, if we're top or bottom, gives us a direction. Before news, if we're in a level, again, also reversal opportunities. Again, control your risk, be very cautious. What we have coming down the pipe is also a bit dangerous. Okay. Dollar CAD. So dollar CAD's driving. So dollar CAD was, this level we talked about it. It's been hit a bunch of times at this point. It hit it here, hit it again, hit it again, hit it again, hit it again. Actually breached the top and then kind of tested itself. And it started basing before, and it hit it again and pushed it. So again, we had another actual live push through, and now it's kind of hovering. So I would say, pulling this one back up to a 4 hour, you can see that. Really, it got slammed here, which was all oil based, and now we're kind of rallying all the way back up again. I would say right now, with as many times as we punch through this level, not really a level we want to do anything with. We can pull our fibs. Again, I'm still okay with the targets down south on this one, but I would say right now, we know that the last time these major spikes, they were up to 129.30. Now, you guys all know my wife is Canadian. Do I, one, like it at 129? No. Do I think that right now with where we are, it should be at 129? Probably not. 125, 126 is probably more the median price. Again, this is really being affected by oil. Right now, with oil down 1.8% today, the reason this went down was oil. The reason it's going back up again is oil. The Canadian dollar right now is really just so exposed and so dependent upon oil. Rising interest rates, and again, we've had good data, but anybody mentioning Omicron and the spread and how we don't. Right now, the problem is we don't know the risks. And like I said, there was some data this morning. Pfizer's pill looked like it was great, reduced hospitalizations and deaths by 70%. Problem is that it's in a population that's unvaccinated. So, everybody, the doctors that were talking about it were saying, hey, listen, this is great. We still have to wear masks. Even though we have all these things, you still got to wear masks. And remember, they said the mask is not to protect, the mask doesn't protect you from other people. Right? The mask protects other people from you. So, and they're like, listen, they're like, all these tests, they're doing it on unvaccinated people. So, we got to remember this is not a reason to not get vaccinated, but at the same time, there's now a treatment that reduces hospitalizations and deaths by 70%, which is in Omicron patients, um, in unvaccinated people, but yet we're seeing that like in Omicron after 2 boosters, Pfizer only has a 30% rate. So it's kind of like, huh. It's raising a lot of questions. And again, that may be why oil is moving around. It's like, oh God, all these people are going to spread Omicron. This is going to get bad. And again, it could be a demand issue, right? It could be a demand issue. So yeah, so that's driving dollar CAD. It's a hard one to play. I mean, really, if you like dollar CAD, you should be trading it over in the oil realm because literally whatever happens in oil is dictating exactly what's happening in the dollar CAD. I don't think it's going to decouple at any time, but I think 129.30 is a good area. Dollar Swiss, talk about this one just going sideways, right? We got some levels in this one. This is a 4-hour chart. You can see the channel that we've been in, right, for a while. Even on a 30-minute basis, I mean, you can really see the tops and bottoms of this channel. The 92.66, the 91.67 top and bottom. Aggressive entries at 92.54. And again, we did go a little bit lower again on this one on this 92. I mean, we had 1 hit, 2 hits, 3 hits. Number 4 again, magical number which we broke through. Question is, God, have we established? I mean, is the new low going to be down here? Is this going to be the new kind of intraday basing level where we have this up top, and is this the lower one? Because we did have a confirmation from that 530 reversal. 530 is right here. 530 reversal, test at 830, and then boom, off to the races. And again, another one that you could have taken. It wasn't a huge mover. It's about 40 pips. So, I mean, I guess it was decent for the dollar Swiss. But again, very easy confirmation bottom inside of the dollar Swiss. Okay, but I do think it probably starts to roll back down again, and we come back to the equilibrium point. Dollar yen, kind of the same thing. And I mean, I could continue this across about 6 other times. It's the same thing. We got a channel up top and a channel down below. I think this one is very difficult to trade right now. Again, it's just literally chopping forth between this. If I was going to draw a big box, I would say that this is our kind of our channel right now, our top and bottom. And literally we just keep hitting, again, I could probably even refine it a little bit. Take out just this recent push. And again, there you can see that it's almost like a Bollinger Band, right? You pierced, we almost pierced and we shot through. We pierced and we came to the other side, and then we came back up and pierced, and then we pierced again and pierced and then pierced and then almost, and then it's starting to get smaller and smaller and smaller. I think dollar yen right now is in a consolidation phase. It is really starting to coil up. For those of you that understand what that means, you're starting to see kind of the highs are really starting to kind of push in, and the lows, they kind of opened up for a while, but now they're kind of doing the opposite, and you're seeing new levels of lows kind of coming in this direction. I think the dollar yen is going to be set for an explosive move tomorrow with FOMC. Indices up, indices down, interest rate dollar up, interest rate dollar down. I think there's a lot. It's really coiling up. And again, it's going to be a pre-news analysis that has to be done on this one. Like I said, I think there's better opportunities out there. You're seeing the cryptos now. Cryptos are getting hammered. The reason I'm mentioning the cryptos right now, Dogecoin is up because of Elon. We know what he's doing there. But bonds are down. Look at this. This is crazy. Bonds down. Bitcoin down. Indices down. Gold, oil, silver down. So much negativity. And again, typically when we see the crypto is down, you tend to see gold and silver. And this is kind of what we had gold and silver wise. We mentioned it this morning. We were sitting kind of over here, and actually Monday we mentioned a break of 170.80. Look for targets down here. And we mentioned we'd have some problems, and it kind of hit it and sliced higher, and that was kind of a reversal point, right? You may say, why is gold going down? There's inflation. Well, because we're about to crush inflation. Again, trade has already happened. It was an easy basic level taking advantage of a racetrack. So not much I can do with this one now, guys. I would say tomorrow, we do know that we're down here at 1759, another decent level. I'd really like to see the Europeans send gold higher tomorrow. This Harry Potter's over. I'd really like them to send gold higher tomorrow in the pre-market, because I do think if they talk about how dangerous inflation is and how we need to, halt it, I think gold is a similar reaction tomorrow based off of FOMC. So kind of looking for another selling opportunity for this one. This is a great pre-market move. The way that it was setting up with the lower highs in the overnight, the European session kind of pushed it up and just held it here. It wasn't able to rally at all. And then, man, that news just hammered this one to the downside. And again, we knew we were looking for a racetrack short. We knew with a break of 117. Great opportunity today. If price moves up, I think 1790 is going to be a buying area, or a selling area, and the same thing. I think 1760 is a clean one. We'll see if we can get down there before tomorrow. But European Open, this could be a decent move here. Silver, we're looking for the break. We got kind of a base in there. Again, not a Harry Potter entry off the base, so I'm liking this that again, we're seeing these sellers start to get lower and lower and lower. Um, I'm liking that one. Again, the first punch through obviously before news drove us through. We were looking for another short. We have not gotten the entry yet. We need some type of stabilization in base. And all this one did at 9:30 was take out all the people that were selling short. Right. Remember, silver is basically the Wall Street bets version of gold, right? The newer trader, the smaller account trader is trading silver, not gold. And again, it just shows you that the trap was even more relevant or evident here. I would look for this to continue. I would like it to bounce through. I do think tomorrow we have potential for this one to be short down to 2150. That would be my target by the end of the week that we tag 2150. But again, the silver trade would have been a news based trade today. Um, the market closes in 30 minutes, so there's nothing really to do with silver and gold right now. Um, for what we can do. All right. So, but again, I do think we hit lower tomorrow, particularly with FOMC. Oil. Yeah, I was really hoping oil would come up to 73. It didn't. We had a level here. It wasn't. We were not interested in taking it long because again, it hit one, two, three, and four. Five was what blew through. And again, you guys know this pattern. It dropped at base, that pulled back. A little Harry Potter drop on this one in the European session. Looking to the left about where this one can stop, I would say. I mean, we know we have a gap sitting down here. If I was going to have to make a call on this one, I would say that target wise, probably down here is what we'd be looking for any type of shorts. 67, 67. There's not a whole lot of buyers stepping in. There may be a small group of buyers, but right now, if we're marking off the European session, let's see, 3 o'clock high would have been here. 8:30 low would have been right there. Actually, that's not the 8:30 low. The 8:30 low is there. Right. There's your blue, and then your orange is looking like this thus far. Let's go to 14:30. There's your orange. It's kind of U.S. session really started here, and we're kind of rallying back up again. Remember, we tend to see more bullish movements in oil, but again, down 1.6%, $1.8. It has an ATR of 2. Remember, today, after the close of business, is the API oil inventory report. Regular oil inventory, the EIA number is at 10:30 tomorrow morning. So, will oil get overshadowed this week? Probably, but sandwich between retail sales and FOMC, it's probably going to get, probably going to get overshadowed. But like I said, we mentioned earlier in the week, not interested in taking this one. If you wanted to take like a Harry Potter trade through this level, because again, there's your basing here. You can see that would have been your Harry Potter. Here would have been your short, right? So that level of risk, and your 1 of 3 would have been sitting right there. So just kind of below where it was. Wouldn't be surprised in the overnight if it cranks down to there. So oil, like I said, oil's in a weird spot right now, but all the indices down. Talking about a crashing, economy, not good for overall demand. Natural gas, it's a slow day in natural gas. It's only down 1.8%. So yesterday, again, we talked about this one being high, filling that gap. It literally touched the gap and shot straight down yesterday afternoon. And really, again, there was another gap this morning. We had the gap from yesterday, and it grabbed it and continued to push lower again. Really, it's a hard area, and here's why. We have buyers here, here, and here, kind of establishing this new kind of push forward, and extending it across. The last level of buyers. I'll put a horizontal line in so you guys can see it. There's the last level of buyers, and we're literally sitting right there. So I would say natural gas wise, we're in an area where there's probably more longs than shorts in there. It's going to be drug in, but it's different. Oil is driven by supply and demand. Economy crashes, people may lose their jobs, people are not driving. Natural gas is used for heat. We're not there. Yes, there is heating oil, but that's not what's driving the U.S. oil numbers. Natural gas, again, some parts, 4 days ago it was 70 degrees in Maryland, and then today it's like 31. So it's one of those things. We'll see the numbers on natural gas inventories. Natural gas is kind of it's the kind of almost the proxy for trading. If you don't like the oil market, you trade natural gas. I would say I'd be looking for more of a long right now in natural gas. I think it has more of an upside than anything else. Oil, in a sense, is going to be really kind of driven for U.S. demand. It's a big day. I would say it's a big day down today. Let's see what the API numbers look like. I'll tell you right now, if there's a down and draw and surplus for oil, it's setting it up perfect with a big day down today with the ability to be up $1 tomorrow, right, for oil inventory. So, again, use the 1031 strategy tomorrow for oil inventory. And again, catch us tomorrow morning. We'll see what the market is done early morning. But again, I think we have the potential to go long. So And with that said, like I said, some of the other big ones, it looks like AMC is rallying back again. They were pushing down, and then again, everybody that tried to get short those, whew, they were hurting pretty bad, and they're kind of rolling back again. Again, TLT being down a little bit. Again, it was at a gap. Big push down, big push up again in TLT. Um, VIX is still 13. It's not really slowing down much. And then again, dollar index is rallying up towards an area. This is a 30-minute chart, but again, dollar index is also approaching an area of sellers. So we'll see if we can break through. Again, wouldn't be surprised if we take it here. The Europeans drive this down for a big explosion tomorrow. And again, that should affect all the indices. But like I said, a lot going on in the next 24 hours. Clicking this in and all, you guys can see how much tomorrow there's going to be, whether you're a late night, early morning trader. Again, if you're West Coast, this is 11 p.m. Right? All these are US based time. But again, core retail sales, top 5 news release for the United States, expected to be much, much lower. This could really start us off on a green morning. And then also the economic projections. Again, economic projections are probably good, but man, when they mention inflation and Fed funds and our first raise is going to be 50%, watch the indices drop dollar raise. So a lot going on tomorrow. Again, make sure you guys protect yourself in any of your trades. With that said, that's it for today. Mark your calendars off for next Tuesday at 12 p.m. Eastern Standard Time. We'll go back live doing the week-long analysis of potential opportunities on a weekly basis. Don't forget, we are live tomorrow morning again in our regularly scheduled program time, and you can catch us then. So thank you, everybody, for attending today. I appreciate it. Hopefully you guys got at least one golden nugget. And then again, I will see you tomorrow morning. You guys take care. Have a great trading day, and I'll see you then.